economic calendar can give you insights into upcoming events that might affect the market. Are you looking for a specific currency pair or any particular news events?
Just look every pair. Today, what's the news? Euro news, or Japanese, or USD news, and the today Japanese is looking negative effect on the news since it's open market at one. What is this? Consumer price index negative. So that Japanese yen possibly down today.
On June 27, 2025, the U.S. economic calendar includes several key events. At 8:30 a.m. Eastern Time, personal income and spending data for May will be released. This will be followed by the core PCE price index for May, also at 8:30 a.m. Eastern Time. Later, at 10 a.m. Eastern Time, the University of Michigan's Consumer Sentiment Index for June will be announced. This data could impact the USD. For Japanese yen, you mentioned the Consumer Price Index having a negative effect. Monitoring these events can help inform your trading decisions.
How about euro? Expenditure, consumption, finance, France is slightly drop, but it's better than 1%. So euro
For the
is
euro,
good overall, yeah.
Overall, it seems like the euro is in a relatively stable position for now. Economic data like consumption and finance in France can influence the euro's movement, but if it's better than expected, that could be a positive sign. Keep an eye on how these factors play out throughout the day.
And USD. Core
For the
PCE.
USD, the core PCE price index, which will be released today, is a key measure of inflation in the US. If it comes in higher than expected, it could signal potential interest rate hikes by the Federal Reserve, which might strengthen the USD. Conversely, if it's lower than expected, it could have the opposite effect. Keep an eye on this release as it can significantly impact USD pairs.
It's already released. It's 2.2 to 2.3 price index. YOY May 2.3 better than 2.2. So US is strong, and
Yes, a core PCE price index of 2.3% year over year for May, which is higher than the expected 2.2%, indicates stronger than expected inflation. This can lead to the USD strengthening as it may influence the Federal Reserve to maintain or raise interest rates. This news likely contributes to the strength of the USD today. Keep monitoring how this affects the market and your trades.
and gross domestic product Canada is bad today.
Yes, the release of Canada's GDP data can also have an impact on the market, especially for the Canadian dollar, CAD. If the GDP growth is stronger than expected, it can lead to a positive reaction in the CAD. Conversely, if the GDP figures are lower than expected, it could weaken the CAD. This data is important for traders to watch, as it can impact currency pairs involving the CAD.
In 9 minutes, USD will announce Michigan inflation. In 9 minutes, that will keep eye on that. Let's go to the chart, and I now open my USD across the board. The USD is across the board. I was stalking on usdjpy, and
Got it. With the Michigan Consumer Sentiment Index coming up, it's a good idea to keep an eye on USD pairs, including usdjpy. The data can impact USD strength, so watch how it influences the charts. Let me know if you need any help analyzing the charts, or if there's a specific level you're watching.
I'm get direct to the USDJPY at monthly I look at the monthly right now. It's on the top of the range. They're trying to maintain the price up there after breaching the gatekeeper from the last gatekeeper is being breached, and now they're struggling and jamming as a sideways market. It's got first test, second test now. No higher high, no higher low, no lower low. That's 1 month. So I think it's buyers still control the market, but they're not yet coming back. They're waiting for store ordering fill. They want to fill their orders. They fight at the bottom of the possible range on the weekly, and I divide the weekly as 3 lines: upper band and mid band and the lower band weekly line. They are under the mid band weekly Bollinger Band, and which is mean they are at the bottom of the range, but not really bottom. They fight at the middle of this mid band and the lower band on the weekly. Now I'm going to the daily.
I'm sorry, but you've hit the daily limit for advanced voice. You can switch to standard now to keep chatting.
Okay, can you switch standard voice for me? Okay, we go back to the chart on the week on the usdjpy, where I stalking for quite some time. I lost last 2 position. Now I'm getting too early. I believe that the price will drop down furthermore because of that they are right at the middle of the monthly mid Bollinger Band line. They're trying to bridge this line, but they can't. And at the same time, I'm on the daily. Oh no, I was on the daily. They're trying to break that. Okay, the daily is at the bottom, at the bottom and the mid band of the
Sounds like you're analyzing the USDJPY with a clear view of the Bollinger Band and daily chart. If price is struggling at the middle of the monthly Bollinger Band and you're seeing signs of a potential rejection, it could be a good signal for a drop. With the daily chart showing weakness at the bottom, it's important to be cautious, as it might indicate a bearish continuation. You're being early, but it sounds like you have a solid plan. Keep an eye on any further tests at this level to confirm the move.
I'm not having that solid plan. I'm just trying to do the strategy on the top of the 80% of the MACD. When they touch that, it's time to sell because it's overbought. But the market really belongs to the buyer at the monthly. This guy being bridge, the gatekeeper, and they matching. It was long ago. I said it before that long ago in 1988, the price, the gatekeeper is still there, not being bridged. And recently, they challenged this guy, cannot bridge either. No higher high. They drop back, and sideways market start. And where I can see is they are at the middle of the monthly mid Bollinger Band line. So that's why it's in the middle. And then I can't play anything here unless I go down.
Got it. You're using the MACD strategy at the 80% mark for a potential sell, which makes sense if the market is overbought. However, you're right about the bigger picture. The monthly chart shows buyers still controlling the market, with that gatekeeper level from 1988 holding strong. It's impressive that you've tracked that level for so long, since the price is challenging this level and struggling to break above it. Plus, being near the middle of the monthly Bollinger Band, there could be a bit of a tug of war between buyers and sellers. If the market keeps the price reacts around that midline, especially if it fails to break through. Sounds like you're aligning your strategy with both short-term and long-term trends, which is smart.
So right now, I'm keep going down deeper to the daily, and I know the daily is quite long time to waiting for action to happen. And my daily is also right underneath of the mid Bollinger Band line of the monthly. They cannot break through.
It sounds like you're zooming into the daily chart for a clearer entry point, but you're also aware that the daily time frame might take some time to play out before any action happens.
So
Since your
let's
daily
go down
chart
to
is showing
4
that
hours.
price is right beneath a key level, you're waiting for confirmation before acting. It's a solid approach, but remember, patience is key with the daily chart. You'll want to watch for any price action signals or key breaks, especially around that support or resistance zone. Keep tracking the momentum carefully to decide when to make your move.
So that's 4 hours. Now I'm at 4 hours. I marked down the top sign, they're in right at the mid band of the daily, the 4 hour fighting now at that level. And so is the 4 hours also itself. Eclipse. Landing in
Okay,
the
so now
same
you're on the
place.
4-hour chart, and it sounds like you've marked the top level where price is currently fighting at the middle of the daily Bollinger Band. That's an important level to watch, especially if you're seeing some resistance forming there on the 4-hour chart. It's a bit like a tug of war, where the price is testing that midpoint but hasn't yet broken through. If the sellers manage to hold the line here, it might signal a drop, but if the buyers take control, we could see a push higher.
You
Keeping
see
an eye
that?
on that midband will be key for any clear entry or exit signals.
So is
Sorry, I'm having issues right now. Could not understand what you said.
it is eclipse. It's landing higher time frame, lower time frame, square down to the mid Bollinger Band on the 1 hour time frame. They fight right underneath of the mid band of the weekly. So something gonna happen, but not yet I see anything move.
It sounds like you're watching a critical setup where price is aligning across different time frames. The price is fighting just under the mid-Bollinger Band on the weekly, and you're seeing the same tension across the lower time frames, like the 1 hour and 4 hour. This eclipse setup you're describing could indicate that something's about to happen, but you're right to wait for clear movement. Patience is key in situations like this, especially when you're seeing this level of consolidation. Keep watching for any breakout or breakdown signals and stay alert for price action or candle patterns that might give you a clearer signal to act.
I have getting too early 2 times already. This time it's touching something.
It sounds like you've spotted something. What are you seeing? Are you noticing a breakout or some other key movement that could be your signal to take action? Let's break it down further if you need help analyzing it.
I trying to compare to correlation to USD CAD, the twins, the sister pair. They might show something there. They're also fighting to go up, but the seller at 1 hour time frames seem to be like very strong push down that will make the buyer have a hard time to going up that quickly. So far they look the same. CAD, USD CAD and usdjpy.
It's interesting that you're comparing USDJPY with USD CAD. They're both showing similar behavior. If the sellers are pushing strongly on the 1 hour chart for both pairs, it could signal that any upward movement will be tough for the buyers, at least in the short term. It sounds like there's strong resistance in both pairs, so you might want to watch for a potential pullback or reversal if the sellers keep holding their ground. If they're both testing key levels and not breaking through, it could lead to a range-bound market or even a drop. Keep an eye on the price action for confirmation. It's smart to correlate both pairs, especially if they're showing similar behavior.
Yeah, there's time for them to drop for the USD CAD because they're moving up to challenge the gatekeeper, the guy who in 2001 they're standing there, they're not being bridged. So this guy who's responsible for the price to move down, and now it being tested to move the price back to test the gatekeeper, where is the best price to smash this thing down again, since the buyer struggling trying to come up with first leg, first attempt, first set of the test, and then coming second time a little bit higher, trying to bridge the gatekeeper all the way up there. And now they are at the critical point, but my MACD is not yet reaching 80% and it's almost there. Sarcastic is already reached there and all the way moving down. And also the candles, the price is very strong intention of the rate. The seller push the price, smash the price down at this psychological area where the gatekeeper almost being touched, and then the seller gatekeeper smash it down. And this is like on top of my 36 MA or mid Bollinger Band line at weekly, and they fight at the weekly mid band.
You're describing a really interesting setup where USD CAD is challenging that gatekeeper level from 2001, and you're seeing the sellers pushing hard to defend it. It's like a final test, with the buyers struggling to make the first attempt and then testing again a little higher. The fact that your MACD is almost at 80% but hasn't yet reached it could be a sign that you're getting close to a potential entry point. Meanwhile, the sellers seem to be showing strong intent with the price action, especially with the psychological area near the gatekeeper. If the sellers manage to push it back down, especially with the price around the 36 MA and mid-Bollinger Band on the weekly, that could be a key signal. It's great that you're tracking all these levels and confirming with indicators like MACD and Bollinger Bands. It sounds like a critical point for this pair, and your patience might pay off soon. If the sellers manage to take control, that could lead to a significant move down, especially considering the strength of the sellers you're seeing. Keep monitoring this, and the timing could align for a good trade entry.
I trying to gauging momentum because the gatekeeper at weekly around 2002, I don't know. Anyway, the next gatekeeper, they've been challenged.
I see you're really focusing on gauging momentum around that gatekeeper level at the weekly chart near the 2000 price level. Since this level has been in play for such a long time, it's key to watch how the price reacts as it approaches. If the momentum is strong from the sellers, you could see the price turn away from this level, especially with the sellers pushing hard right now. If the momentum weakens or the buyers start to show some strength, it might indicate a potential breakout. Keep an eye on how the candles and indicators align to give you that confirmation. This could be a critical point for both USDJPY and US CAD, as the market is testing some important historical levels.
There's been hit since 2016 and 2020. There are touch double top here.
That's even more significant. Since the gatekeeper level has been in play since 2016 and 2020, it's likely a very strong historical level with a lot of market memory. The price trying to challenge this level now, after so many tests in the past, suggests it's a key point for both the buyers and sellers. The fact that the sellers are pushing with strong momentum near this level could be a sign that they're ready to defend it again. If it holds, it might push the price down as it has before. The longer the price stays near this level without breaking through, the more likely it is that this level could once again prove to be a solid resistance.
Is the seller, when they got to that double top, they smash it right away, but they make it into 1, 2, 3 leg. 3 leg. 1 leg mean they respect the SLR. They're like a train running down with 3 leg or 2 legs. And back to the gatekeeper of the buyer who was able to push this up to challenge the gatekeeper of the seller, and they start to set the pin point where they can first incident of fight to set up the range here. First, second, third is like I don't know where the direction yet, because they has to give some time to order.
It sounds like you're describing a clear sequence of price action, with the market respecting certain key levels, especially the double top, and then using the 3 legs pattern as confirmation. The fact that price is running down with multiple legs suggests that it's respecting the structure and momentum, like a train moving in stages. When you see this type of movement, especially near the gatekeeper level, it's like the market is setting up the battle between buyers and sellers. The 3 legs might signify a more organized move, with each leg pushing to test the range, and each leg's behavior could give you insights into whether the sellers are going to break the level or if the buyers will take control. It sounds like you're looking for confirmation through the stages of the fight at the gatekeeper level, where the first, second, and third tests could play a significant role in setting up the range. Keep watching for any signs of exhaustion or reversal at these levels for your entry.
This, after all, they set up a form of the head and shoulder. They come at the lower shoulder, and now the direction need to show either they want to go up or to go down. It's like a decision spot of both parties.
It sounds like the price action is forming a head and shoulders pattern, with the lower shoulder currently being tested. Now, the market is at a critical point where the next move could decide whether it's going to go up or down. This is the type of decision point you're talking about, where both buyers and sellers are likely preparing for their next move. If the price fails to break higher, it could trigger the right shoulder and complete the pattern, signaling a potential move down. On the other hand, if the buyers manage to push through, it could invalidate the head and shoulders and push the price back up. This is a key moment for monitoring the direction closely. Once this pattern is confirmed, it could give you a clear entry point. Keep an eye on the momentum and any signs of exhaustion or reversal around this point.
Yeah, they are right at the mid of the Bollinger Band line on the 4 hours. I'm look at the 1 hours now. My 1 hour is stay on between the top of the band and the mid of the band. So they're right at the mid of the band, right above it. But the seller, first leg, second leg is like very strong too. When I look at 1 hour, when I can see more clearly who is who. Buyer take 1 leg, 2 leg up, 3 leg, after third leg no higher high, and the seller smash it down right where it's 100% back to where the buyer is pushing, and then the buyer have a second chance to push the price up from the create a shoulder, and then the seller smash it down again with a very strong intention. One whole day of yesterday, the USJPY is drop. No, USD CAD is drop, so as the USJPY drop, but not as much as USD CAD. So CAD is weak today, but we just watched the news. Even the
You're
same
really
chart is
breaking down the action between buyers and sellers at key levels. The price is at the middle of the Bollinger Band on the 4-hour, and on the 1-hour chart, it's sitting right between the top and middle of the band. It sounds like the sellers are making their presence known, especially with those strong pushes after the buyers try to make higher highs but fail. The way you describe the legs, first, second, and third, shows that the sellers are consistently overpowering the buyers after each attempt. This strong push from the sellers after each leg of the buyers could signal that the sellers are in control, especially with the price getting pushed back down from the third leg. You also mentioned that USD-JPY is dropping, but not as much as US-CAD, which could be showing a bit of divergence between the two. Even though USD-JPY is also seeing some downward movement, it's not as aggressive as USD-CAD. This might suggest that the USD-CAD pair is more vulnerable to the sellers at the moment, or it could indicate that USD-JPY has stronger support or resistance levels holding it up. It's worth keeping an eye on both for any confirmation or divergence.
US Swiss franc is even worse. They dropped very bad. Let me go there, open this bigger. US Swiss franc yesterday. Same.
Sounds like the USD CHF is showing even stronger selling pressure. Opening the chart on a bigger time frame should give you more clarity on what's happening. It might reveal some key support or resistance levels, or even a bigger pattern forming, which could explain the sharp drop you're seeing. Let me know what you observe once you have the chart open.
This morning I look at the US Swiss franc and I see it drop, and I don't believe myself because it's so overextending. I don't think they're going to go down anymore, but they did this morning. Until now they just make a little bit pulling back.
It's always surprising when the market goes further than expected, especially when you think it's already overextended. The fact that the USD CHF dropped more this morning, despite seeming overextended, could indicate that there's still underlying pressure, or that market sentiment shifted unexpectedly. This is why it's crucial to watch for any signs of continuation or reversal when the market surprises you like this. Sometimes markets can push past what we consider overextended levels if there's strong fundamental or technical backing behind it. Keep an eye on the support levels and any changes in momentum. It could be a sign of a deeper move or a reversal coming up soon. Sorry, I'm having issues right now. Could not understand what you said.
So, USD Swiss franc, US Swiss franc is overextend. Should I think to...
Got it. You're saying that the USD CHF run feels overextended. When a currency pair seems overextended, it often signals that the price may be due for a correction or pullback, especially if it's been moving in one direction for a while. However, the market doesn't always follow the expectations of being overextended, so it's important to look for any signs of exhaustion or a shift in momentum. If the price continues to drop despite being overextended, it could indicate that the sellers are still in control. But watch for any signs that could suggest a reversal or consolidation before making your move. Does the price look like it's reaching any key support or resistance areas that could trigger a change?
It's incredible that I believe that they're gonna pulling back to give that for the seller to smash them again. But today they're pulling back. And
it's interesting that you thought the market would pull back to give the sellers another chance to smash it down. When the market doesn't pull back as expected, it can feel like it's going against what we've anticipated. However, sometimes when a price is overextended, it might not give the typical pullback you expect, and instead, the momentum can keep pushing. If the sellers are still in control, they may not need a pullback to continue driving the price lower. But if the market does finally give a pullback, it could be a good opportunity for sellers to get in again. Keep watching the price action for any signs that a pullback might happen soon, especially if it reaches key levels that could offer a solid entry point for sellers.
Because the news said USD
USD is weak. That could explain the continued downward pressure on pairs like USD CHF. When there's negative news surrounding a currency, it can often lead to sustained selling, even if the price appears overextended. Market sentiment tends to align with news, so if the USD is being viewed negatively, it could push the price further down despite any technical expectations for a pullback. It's crucial to stay aware of these news events and their potential to influence momentum. The sentiment from the news could be the driving force behind the recent price movement, so it might be a good idea to wait for a clearer signal or confirmation if you're planning to trade around this.
the odd thing, the strange thing is that USD is suddenly strong against the price is moving up north, but the news event say USD has the negative news, but negative news supposed to make the USD US switch run drop because USD is weak, but it's not. The USD pulling back like one full throttle, bridge the guy who
That's
started.
definitely strange, especially when the news says the USD is weak, but the price is moving up. It's a classic case of market behavior not always aligning with what we expect based on the news. Sometimes the market reacts to news with a delay, or in a way that doesn't immediately match the fundamentals. In some cases, traders might have already priced in the negative news, and the market could be in a phase of pulling back or consolidating before the next move. Another possibility is that there's other supporting factors for the USD, like interest rate expectations or global market dynamics, that are influencing its strength despite the negative news. It's a reminder that news isn't always the only thing driving price action. Sometimes market sentiment or technicals can override it. Keep monitoring for any shifts in price momentum that could give you a clearer picture of where things are headed. Sorry, I'm having issues right now. Could not understand what you said.
Anyway, there is the 1, 2, 3, 4 announcing news from USD. The last one was University of Michigan Consumer Confidence that gave a positive news. Among these three of the bad negative news on the USD news. So maybe that's why they count on the last one. It was better than the previous, the current one, even the prognosis one. That is, maybe that's why
that makes sense. The positive news from the University of Michigan Consumer Confidence could be acting as a counterbalance to the negative news on the USD. When there's a mix of positive and negative news, traders might focus more on the last piece of data that shows improvement, especially if it beats expectations. In this case, the Consumer Confidence Index might have helped boost sentiment around the USD, even if the earlier reports were negative. It's a good reminder that market reactions aren't always linear. Sometimes one piece of positive news can outweigh a series of negatives, especially if it suggests that the USD might not be as weak as initially thought. The market may be reacting to this optimism, which is why we're seeing the USD pull back despite the overall negative sentiment. Keep an eye on how it continues to develop. It could create some interesting trading opportunities, depending on which way the market decides to lean.
Yeah, that's why USD can have a second chance to jump back to show that I'm here, I'm a good news effect, and I move back and challenge this guy is like one touch and moving back to like nothing happened. It's like a bear trap.
Exactly. It sounds like the USD is using that positive consumer confidence data as a second chance to show strength, almost like a bear trap. When the market sees the USD pulling back after negative news, traders might think it's continuing to weaken. But then, out of nowhere, The positive data causes the USD to snap back, trapping those who are betting against it. It's a classic move where the market fakes out the bears before making a sudden reversal. This kind of behavior can shake out weaker hands or trigger a quick move in the opposite direction. It's a reminder to stay cautious in these situations, especially if you're considering going against the broader market sentiment, because sometimes these trap moves can be sharp and sudden. Keep watching for any signs of continuation or exhaustion in the move.
But when I look at the 1 hours across the board, it's like nothing happened on the higher time frame. That moving back thing is like you don't see in the higher time frame.
That's interesting. It sounds like the price movement on the 1 hour time frame might be showing a lot of action. But when you zoom out to the higher time frames, like the 4 hour or daily, it's almost as if nothing significant has changed. This kind of behavior can happen when the market is making quick moves on smaller time frames that don't have as much impact on the bigger picture. Sometimes these smaller time frame movements are more about short-term sentiment or noise, and they don't always translate to lasting changes on the higher time frames. It's a good idea to stay focused on those bigger time frames when looking for more reliable signals, especially if the 1 hour action feels a bit like a false alarm. Watch the higher time frames for clearer trends or reversals, and use the smaller time frames for fine-tuning entries and exits.
Euro USD is also on the upper band line above of my 1 hour upper band line also.
So EURUSD is also at the upper Bollinger Band? That's definitely a key observation. When price reaches the upper band, it's often considered overbought, which could suggest the potential for a reversal or pullback, especially if there's a lack of strong bullish momentum to push further. If the market's already at that upper level and you're seeing some signs of resistance or indecision, it could be a good time to look for opportunities to sell, especially if other factors like a shift in market sentiment or news suggest a weakening. However, if the price breaks above the upper band and continues upward, it could signal strength and continuation. So it's important to stay flexible and watch for any signs that confirm the direction. Keep an eye on any rejection or strong candle formations around that upper band. Those can be great indicators for a potential reversal.
But when I look at the higher time frame, like the monthly, it's time the euro need to go down because it's reached to the upper band line of the monthly and just about trying to bridge over the band, the upper band line, but they cannot. They still have to work more to get through this key level. That's the monthly.
I see. So on the monthly time frame, EURUSD is right at the upper Bollinger Band and trying to breach that key level, but hasn't quite managed to do so yet. That's a really important observation, especially when you consider the long-term view. If the price is struggling to break through the upper band on the monthly, it suggests there's resistance at that level, and it could be a sign that a pullback or reversal is likely. The fact that the price is having trouble pushing beyond it adds weight to the idea that the euro may need to drop and consolidate before making another attempt. If this resistance holds, the momentum could shift to the downside, which would align with a bearish outlook. This is why the monthly time frame is so crucial. It gives you that broader perspective on key levels that smaller time frames might miss. You'll want to watch how the price interacts with this level in the coming days or weeks to determine whether it's a breakout or a failed attempt.
Now I'm at the weekly. The fight is at the upper band line of the weekly.
Got it? You're on the weekly now?
Yes.
If the monthly shows resistance at the upper band, the weekly can provide a bit more granularity on how the market is behaving around that level. Is there any sign of exhaustion or indecision on the weekly chart, like a long wick, doji, or a bearish reversal pattern? These could signal that the price is about to make a move back down, especially if the higher time frame, monthly, suggests difficulty in breaking that resistance. You might also want to check the overall trend on the weekly. Is the price still in an uptrend, or is there a shift in momentum happening? This could help confirm whether the current resistance level will hold or if the market will manage to break through.
Well, they are moving to challenge the gatekeeper of the seller. Right there, my MACD also reached
So the
to
price is moving to challenge the gatekeeper of the seller on the weekly. That's an important moment. If the price is testing that key level again, it's like a final attempt to break through. This could be a pivotal point where the market decides if it will push higher or start to reverse. A successful break above the gatekeeper could lead to more upside, but if it fails to break, it might signal a strong rejection and a potential move back down. Keep an eye on how the candles form as they approach this level. If there's a sharp rejection or a long wick, that could be a sign that the sellers are regaining control. On the other hand, if the price manages to breach this level, it could indicate that the bulls are still in charge and the rally may continue. This is a crucial zone to watch.
they are in the lower time frame. They're also at the same spot, like the eclipse, and at the weekly.
So they're at the same spot on the lower time frames as well. That's even more interesting. If the price is testing this key level on multiple time frames simultaneously, it shows that this level is really important. You could be at a critical point where the market is deciding whether to continue or reverse. On the lower time frames, like the 1 hour or 4 hour, you'll likely see more immediate action, like rejections or breakouts, that could give you a clearer idea of short-term direction. Watch for candlestick patterns that suggest indecision, like dojis, or any bearish patterns if you're expecting a pullback. If the price can't get past this level and starts showing signs of failure, it could be a strong signal that the sellers are in control, especially with the weekly resistance still looming. If it breaks through, though, be ready for a possible continuation to the upside. Either way, it's a critical area to observe closely.
Now I'm at 15 minutes. Yesterday 15 minutes was history. This guy been able to creeping up slowly but manageable to break above the day before higher level, and now the move is like slowly up to reach to the critical level where the seller gatekeeper will smash him down. But right now it's very boring and slowly inching up, not really significant move. And I don't know if I like to sell here for small lot size to test the water here, to bring it back down to where it was yesterday low. But that is, look at the volume and the news. In very soon new coming a GDP in about 9 minutes, or how many minutes? In about oh my eyes. 59 minutes GDP come, right? News.
It sounds like the 15-minute chart is showing some slow, steady movement, inching up towards the critical level where the seller gatekeeper could take control again. The market seems to be moving without much urgency, and it's tricky to gauge whether it's a good time to sell, especially with the upcoming GDP news in about 50 minutes. Since the price action is slow and the volume doesn't seem significant, it might not be the best time for a big position. But testing the waters with a small lot could be a strategic way to see how the market responds. The news event could create volatility, and it's hard to predict what direction it will push the market in. If you're aiming for a smaller pullback to yesterday's low, consider setting tight risk management levels, especially since the market's not showing much strength right now. If the GDP data surprises, it could either accelerate the move up or trigger the sellers. So being cautious with position sizing makes sense in this situation.
Yeah, right now it's time to waiting for that GDP thing, but I could try to test the water by getting in small lot size, and then because why? Because I see the divergence is coming on the 1 hour. My Bollinger Band is not reached to 80%, but my price is higher than my SNR, which is mean divergence.
Ah, I see. The divergence you're seeing on the 1 hour chart makes it interesting. If the price is moving higher while the indicators like the MACD or RSI aren't confirming that strength, it can be a sign that the trend might be running out of steam, especially with the SNR levels showing a divergence. Since the Bollinger Bands haven't reached 80% yet, you still have room for movement. But the divergence suggests that the momentum may be weakening, making it a good time to test the waters with a small lot size. Given that you're waiting on the GDP news, it's smart to stay cautious. If the price breaks higher and you're not in yet, the news event could either validate your position or move it against you. On the flip side, if the market starts showing signs of reversal or exhaustion before the news drops, you'll be in a position to take advantage. Keeping your position size small lets you manage risk effectively while keeping the potential for a good move if the market reacts to the divergence and the approaching news. Just keep an eye on how the news plays out. It could be a major catalyst for volatility in either direction.
I decided to put sell limit on the super trend sell, super trend down, right above of this possible range before they test each other. I want the price to bouncing back to fill my limit sell at the trend down, super trend down mark. We'll see if it come back to pick me up. I don't want to
That
buy.
sounds like a solid plan. By setting your sell limit just above the potential range and near the super trend down mark, you're positioning yourself to catch the bounce after the price tests the upper levels. It's a good way to leverage the market's natural ebb and flow. Since you're expecting some retracement or a pullback before a stronger move, this could set you up nicely for the next phase of the trend. Also, placing the sell limit where the price has previously bounced or where it's likely to face resistance increases your chances of a good fill. Now, with the potential divergence you're seeing on the 1 hour and the fact that you're anticipating some price action before the GDP data is released, you could capitalize on any last-minute push up to your entry point. Once the news hits, it'll either confirm your position or move things the other way. But at least you'll be in a good spot to react accordingly. Just be sure to monitor it closely, especially since the market could shift quickly based on the news.
Yeah, I put that already limit sell, and I set up my stop loss and take profits just above the just above the the last SLR. For the take profit, the lower of the two leg down. I don't know how to say that, but anyway, it's about 1 to 2 R.
Got it. Setting your stop loss just above the last SLR makes sense to protect yourself in case the market pushes higher against your position. As for the take profit, targeting the lower of the two legs down is a good approach, essentially aiming for a key level where the price is likely to find support. That 1-to-2 risk-to-reward ratio sounds like a solid setup, giving you a good balance between potential gain and risk. The key now is monitoring how the price reacts to your entry and staying flexible if the market moves in a way you weren't expecting. If the price reaches your limit and doesn't hit your take profit immediately, watch how it behaves at that level to see if there are any signs of further movement or a reversal. All in all, it seems like you're prepared well with this strategy.
Yeah, let it run. I'm not going back there again. I have to work. I have to go back to my work. And that's only one position that I set in today so far. And I won't have time to come back to do anything.
Sounds like you've set yourself up with a solid trade and made your plan. Now it's time to let it play out and focus on your work. Keeping it simple with just one position today can be a smart move, especially when you're in a good spot with a well-thought-out strategy. Hopefully, everything goes as expected. Good luck with your work, and we can check back in later if you want to assess the trade or discuss anything else.
Right now I put everything back into the 1 hour sequence across the board where I set in the position, the precision, pull the trigger, buying, selling. I sell this time. I'm not buying because euro make me think that from the weekly they touch at this spot and it looked like they eclipsed and everything not 100% yet, but I have no time to go further deeper to support my strategy. I just put the sell limit on. I wish I just push it directly buy or sell because the price now start to move, not come back to lift me. They go away from me.
It sounds like you're monitoring the market closely, especially using the 3-minute time frame for precision on your entry. Since you've placed a sell limit, it can feel like you're waiting for the price to come back to you. But sometimes the market will move away before it reaches your desired entry. You've got a good sense of the timing, though. Your focus on the weekly chart for context and confirmation, as well as your patience with the setup, shows you're letting your strategy guide the trade. If the price keeps moving away from your entry, that's something to keep in mind, but don't chase it too much unless there's a clear signal to adjust your approach. For now, it looks like you're trusting your plan, and that's key.
Yeah, I hope they come back to my position where I was ordered to limit sell. If it's not, I will look for another sister pair.
It can be tough when the market moves away from your entry point like that, but if the price comes back to your limit order, it could set you up perfectly. You're sticking to your strategy, which is great, because sometimes patience pays off. Just keep an eye on the momentum and any shifts that might indicate whether the price could retrace to fill your order. It might take a little time, but if it does come back, you'll be in a good spot to execute your plan. Keep steady and trust the process.
We have 50 minutes before the GDP news announced. I don't know if it will come back and lift me. But anyway,
With just 15 minutes before the GDP news release, things could get interesting. The market might be quiet in anticipation, or we could see some volatility as traders position themselves ahead of the announcement. Since you're already in a trade with your sell limit set, it could be a good idea to stay alert. News like GDP often moves the market, so there could be a spike in either direction when the data is released. If your limit order hasn't been filled yet, consider whether the market could spike through your level. If the news is positive for the USD, it might push things in the direction you're anticipating. Just stay flexible and be ready to adjust if necessary.
it look like every pair is start to set up correlation in 1 hour chart.
That's a good observation. If every pair is starting to show a similar pattern or correlation, it could be signaling a shift in market sentiment. Often, correlations between pairs can help confirm your bias, especially when multiple pairs are reacting similarly to upcoming news like GDP. If you're seeing the same movement across different pairs, it might suggest a stronger trend in one direction, making your trade setup more reliable. Of course, with the news coming up, there's always the risk of sudden volatility, but if the setup aligns with your strategy, it could work in your favor. Make sure to keep an eye on those correlations and how the market reacts once the GDP news hits. Sometimes it provides a strong follow-through, but if the data is unexpected, it can lead to rapid reversals.
Everyone fight at the mid Bollinger Band. So, but this 1 hour perspective is
Haha, it sounds like you're having some fun with the market action. The meatball in Japan could be your playful way of describing a key level or market point where there's a lot of resistance or consolidation. It's like the market's in a tug of war, right? That's usually when things get interesting, waiting for that breakout or reversal. Are you looking at the JPY pairs closely right now to see how they're reacting to the fight at that level?
it seemed to be like USD suddenly turned to be strong across the board. I don't know what news. Maybe the last news we just
Yeah, that can be a surprise sometimes. The USD can be a bit of a roller coaster. Sometimes it pulls back even when news seems negative, and other times it rises unexpectedly. It's likely that investors are taking the positive news, like the University of Michigan consumer confidence, as a reason to buy back into the dollar, despite the overall negative sentiment. Are you seeing that strength particularly in USDJPY or across other pairs too?
I haven't looked yet the JPY across the board. I will go there right now. Let's see. But I need to adjust of my chart before that. I need to look for correlation now. That's my eye scanning for. If no correlation doesn't support my buy or sell will work. Let's see. Japanese. I need to open.
Got it. Scanning for correlation is key to making sure your positions align with the broader market moves. Once you find those correlated pairs, it'll give you more confidence in the setup. If the correlations aren't lining up, it's probably a good idea to sit tight until everything falls into place. Let me know what you spot once you adjust your charts.
Just a moment. It's opening up now. I'm in New Zealand.
Take your time. Let me know what you find when you're ready.
It looks like Japanese is weak across the board. Everything moved up north.
Got it. If the JPY is weak across the board, that could be a signal to look for buy opportunities against the JPY pairs, or potentially even short opportunities on pairs where the JPY is paired with stronger currencies. Does this align with your setup, or are you still waiting for a clearer signal?
Well, they have to maintain their ground. If they can break or bridge above this key level across the board also, because it could be mean that they reach to the stage where the seller gatekeeper will smash them down because they come to the right where they're waiting for.
Right. It sounds like you're watching for a key moment where the price might hit a strong level, either testing resistance or facing a seller's gatekeeper. If it breaches that level, it could signal a continuation or reversal. But if it fails to break through, the sellers may step in and push it back down. Do you have any particular levels in mind that you're watching? Or are you just gauging it based on the overall action across the board?
I'm compared the mid Bollinger Band line and where to get in and out, and correlation, of course, across the board to see if it's possible to move in the same direction.
That's a solid approach. By looking at the mid-Bollinger Band and checking for correlations, you're essentially gauging whether the market is aligned across pairs, which can give you more confidence in the direction you're taking. If multiple pairs are moving in the same direction or showing similar patterns, it strengthens the setup. How are the correlations looking now? Are the pairs behaving as expected, or are you seeing any surprises?
They all touch the mid line, Bollinger line. They're all there fighting there, and they need to move out, break out from this fight before, or I have to get in, which is I try, but it's not my price, so I set the limit order because I know that they're going down, but I don't buy that price. It's need give me discount. That's why I put my limit sell order.